Hey there, it's Jared Hamilton with the Hamilton Group at Cherry Creek Mortgage, and welcome to another edition of Java with Jared. Hope you guys are doing fantastic. Happy Friday. Well, the interest rate environment did continue to get a little bit worse this week. We've seen this, kind of transpiring over the last 3 weeks. So rates did suffer again this week, and it wasn't due to economic data so much. We didn't see really much released. We saw the retail sales number came in today, and that was as expected. 0.6% was the increase, and then when we strip out autos, it was 0.3 of an increase, and that's a decent number, and that was just what the market expected. Consumer sentiment got a little bit better than what the market was expecting and what it was last month. So the consumers are feeling a little bit better. It's nothing major, but this week the real reason that we saw interest rates suffer is just all in anticipation of what's going to happen next week. Next week is going to be a huge week, not only because we have a lot of economic data, but primarily the Federal Reserve will be meeting. And we're in September, and so it's expected that the Federal Reserve will be ending quantitative easing, the purchases of mortgage-backed securities and treasuries, in October. That will be kind of the last announcement, and they'll stop buying mortgage-backed securities. And so the market is just kind of wondering what's next. Is the Federal Reserve going to signal next week that it might need to start increasing credit sooner than what the market was expecting, or will they continue to be dovish, where rates are going to continue to be low from the Fed funds and discount rate, and that the Federal Reserve believes that they need to keep interest rates low for a while just to let the economy get really back up on its feet. And so the market is just kind of selling off just in anticipation of what that's going to happen, and that's causing interest rates to suffer. So next week's going to be a real big week. Personally, I think that the Federal Reserve will continue to be dovish, and we'll see rates begin to rebound next week. Who knows? But we're also going to see a lot of economic data. We're going to see the PPI come out, CPI come out, housing starts, building permits, and the Federal Reserve meeting. So it's going to be a big week, and we'll let you know what happens with that. So rates are a little bit worse, but next week, hopefully we might see them begin to rebound, or the hits could continue. So we'll keep you informed. If you have any questions, as always, give me a call. Hope you have a very wonderful weekend. Thanks for joining me with Java with Jared, and we'll talk to you soon. Bye-bye.